If you're a mortgage broker, tired of wasting time on unqualified leads, spinning your wheels with tire kicker discovery calls, and chasing deals that don't convert, this episode is your wake-up call. My guest, Taylor Atkinson, quietly did over $5 million from his podcast. But more importantly, he's been able to eliminate his discovery calls because he built so much trust before the client even gets on a phone call with him. And he's able to get applications and documents before he ever talks to his clients. This is an absolutely brilliant strategy. And one of the benefits of creating long-form content that builds trust. Hey, I'm Scott Packford, the founder of Bricks Mortgage, one of Canada's fastest growing mortgage brokerages. And every week I bring you guests to help share ideas, strategies, tactics to grow your business. Or sometimes I dive into solo shows. Today, my guest, Taylor Atkinson, he shares some amazing insights about authenticity, about how he saying no to a client actually builds more trust and gets him more business. And he talks about how this whole podcast strategy that he started 3 years ago has absolutely been killer for him. I think you're going to enjoy it. Before we jump into that, I want to give a shout out to our sponsor, Ownwell. Ownwell is an amazing tool for Canadian brokers. It allows you to send these reports to your clients that help them track their home equity and their buying power. And they have high open rates, 60 to 80%. And because it's about the person's own home, and it creates tons of conversations for refis, for opportunities to buy other property. Check them out at ownwell.ca/Scott and check out this conversation I have with Taylor. Hey, Taylor, welcome to the show.
Thanks for having me.
So, hey, before we jump into this, tell me a little bit about yourself and how you got in the mortgage biz.
Well, I worked on helicopters for 20 years overseas. And, during that time, I built up a pretty healthy portfolio of rental properties in Canada. So I was non-resident, living in Panama, doing that whole overseas tax thing, as well as growing a real estate portfolio. And then, when my wife and I decided to move back to Canada, kind of in the crux of COVID, I thought I would be a pretty good mortgage broker and it would provide lots of autonomy and it would just be easy money and low stress. That I was definitely wrong. But so I got my license and I think I started funding deals in 2020 or 2021. And that's kind of how I got started out.
So how's it gone since then? So since 2021, do you recall what was your first year like?
Yeah, it was pretty good. You don't know what you don't know. So I listened to your podcast. I read Dustin Woodhouse's books, kind of thought, I'll just be speaking to a couple lenders and basically facilitating deals, and it shouldn't be that hard. And then you get buried in documents and stressful COFs and all this stuff. But I think the first year was pretty good. I want to say I did around 10 or 11 million in volume. And then it just kind of compounded year after year. And when I look back, it was a pretty good decision, I think. So,
right. But I mean, the easy money and low stress, it's
not the case.
It's not that. There's good money in it if you can manage the stress. But if you can't manage the stress, it's going to be a problem.
Absolutely. Yeah. The workloads, you tend to burn out more than you would expect in this industry. But I got a good balance going on right now. So
when I first started in mortgages, I was a paramedic. I actually found being a paramedic less stressful than this. I found that I could handle almost any paramedic call, 911 call. I found less stressful than somebody's financing because the 911 calls were over relatively quickly. It was a high stress moment, but it didn't drag on for a week where you're like, is this deal going to die? Is it am I going to be telling them, hey, you're going to get sued? You're going to lose your deposit like that. I think it was the prolonged, it was like you're in a pressure cooker versus as a paramedic, it was 30 minutes. If it was an hour of an intense call by the time you get there, that would have been peak. It was 1 hour. It's okay, you can handle high stress for an hour, but stretch it out over 7 days or 2 weeks. It's different.
I've thought about this. I'm as I evolve in this industry and I see issues come up more frequently, will my stress level go down? Because same deal, right? Previously working on helicopters, you're fixing an aircraft that's flying around a dozen people and, we'd be out heli skiing or firefighting or offshore oil and gas, whatever. On one of my last jobs, the aircraft, the main rotor blade hit a tree heli skiing, but it wasn't a stressful incident because that was my second aircraft that hit a tree, heli skiing. So it's just like, you're like, oh, I've done this a million times. Like, I know what the issues are going to be. Mortgages, it's like, man, there's just surprise after surprise after surprise. So yeah, we'll see
Yeah.
if this starts to go down after a few more years.
I've often said there's that, like, I think there's 1,001 ways to die in the West or something. I think there's a movie. It's kind of like there's 1,001 ways for a file to die. Like, there's just, and when you think you've seen them all, another one creeps up and you're like, never saw that before. And then,
Totally.
you learn from it. So I want to ask you about authenticity, because I think is one of the things that you have been champion of, but also something you're intentional about, is this idea of being authentic with your clients, with who you are, your brand. Maybe talk me through that and how you feel like that's helped you. And also back to the stress thing, it actually helps with your stress, because you're not trying to pretend or fit into something that you're not, right? You're not over promising crap if you're, so talk me through that.
Yeah, thanks. Yeah, I think quite a bit to unpack there. Something I've focused a lot on recently is more like return on energy instead of return on investment. So, and that's part of being authentic, I feel. So if I'm, most of the clients that I'm working with are high net worth, business for self. I'm an integral part of their team. I'm working with their CPA, their financial advisor, because I enjoy that. Like, I enjoy speaking their lingo, and I actually love tax code, hence like moving to Panama and doing that thing. So
yes, there's less taxes if you can do that.
Yeah, 0% tax, but doing it legitimately and like finding loopholes,
the legal ways
opportunities, to build wealth. So I love being on that part of the team. And the authentic piece, I'm not super hungry on the commission side. Like, I just think there should be more transparency in this industry, like on the client side of things. It's crazy to me how like penalties in Canada are like, you don't know who has the best rate. And it's, the clients are just inherently, they need to trust their broker or bank like a lot. So in the last couple of years, this whole renewal gold rush that brokers were talking about, I honestly thought it was like complete bullshit. Like, on the renewal side of things, unless there is a pain point that you can address with the client, whether that's, increased monthly budget or equity takeout, consolidating debt, whatever, that lender, like 90% of the time, is going to give you the best renewal rate. To beat that out is pretty tough. And you can come up with all these like complex strategies and doing the Smith maneuver and this, that, whatever. And I've seen ads out there like on Instagram of other brokers saying, hey, here's how you beat like CIBC at 3.89 or something. It's like, yeah, but you're already with CIBC. You have a line of credit with them. It's revolving. Like, you can set up the Smith maneuver. We don't have to switch lenders. So when I've been having those conversations over the last couple of years, I've been turning away tons of work, because I would just say, I can switch you. This is what it would look like. Or, I can coach you for 10 minutes and this is what I would do with my current lender. And, I've probably lost 80% of those renewal clients. And some of them just want to work with me just because they're like, yeah, I'd rather have you in my corner. But the referrals I get from them moving forward is massive. Yeah.
Yeah.
So it's
you're playing the long game instead of the short. The short game is, I'm going to try to convince this person that there's like, the secret sauce that they need to know. And it's like, most of the time it's not that. It's math. Like Ron Butler says, it's just math. So I definitely respect that. That's how you're wired and how you think. And you're right. Like 99, I don't think, unless there's a really good reason for them to change, most of the time there is no, gold rush. It's the bank's gold. They really like their gold, and they don't just let you come in and be like, I want your gold. It's like, you're not getting my gold, and I think that's a definitely did not turn out the way most brokers thought. I think if there's refis that make sense because of strategy, because of a product that's different, cool. But that's a small percent. It's not all of them.
Well, and you know what's happening now? So we're recording this August 19th. Boom, Scotia comes out with a awesome quick close special. All those clients that, I turned down or went variable or didn't do anything, do you not think I'm reaching out to them now saying, hey, uninsured 30-year M 3.99, like, we can move you over. Like, now's the time to address any of those issues. Here's an opportunity, instead of trying to win their business a year ago when like rates weren't really that great anyway. So it's just about trying to like do what's right by the client. I know everyone says it, but I think it is incredibly important.
I agree with you. And sometimes no is one of the best ways to build. Like, you're telling the client, no, I'm not your person. it is the best way to build more trust than saying, yes, I can do it. I've found that in my own experience anyway.
Yeah. Well, how bad does it look when you say, yeah, I can be competitive on that rate? And then they take that back to RBC and RBC crushes you. And you're like, oh, yeah, sorry, I didn't have
You
the
are
best
definitely
rate.
killing your chance for referrals, because what happens is that not only did you not ever have that deal because it didn't make sense for you to do, but you also just killed the referral source. Doesn't trust you because they're like, oh, you weren't looking out for me. And so I think,
Totally.
yeah, that's
The,
absolutely brilliant. Yeah.
the odd time, and yeah, maybe I shouldn't say this, but I know Jim Chirlucas said it a while ago. The odd time if I get a client and they show me the rate offer, if it's genuinely not that great, which happens sometimes, I say, yeah, absolutely, I can beat that. Or if you really just want to stay there and you don't want to go through the headache of this, I can draft you up an email and say I can be more competitive, and if you want, you can leverage that against the bank, and if they don't take it, then let's work together. So it's just like little simple things to, if I was in their position, that's what I would want.
Right. I've described it before as it's like poker. In poker, you can't win every hand, but how you play a hand you can't win will set you up to win other hands. And so these deals that you can't win, if you play them right, if you take care of the client, if you ask for reviews, maybe say, hey, look, here's a letter, can't help you out, but maybe we can squeeze them. Tell your friends about me. Go write a review. You are setting yourself up to win other hands, and you have to play a different game. I feel like that comes with, just maturity and, as you said, authenticity and transparency. Back to you mentioned that earlier.
Yeah.
Tell me about return on energy. I love this. So how do you decide what's a return on energy versus return on investment? And why did you make that switch? As a guy who invests in real estate, obviously likes investment and invests in real estate and investments.
Yeah, man. I mean, it's hard to quantify, except, recently, like you, I got the Whoop band. So I'm trying to like manage stress and health and optimize that. So I can probably quantify it a little bit more, but, something that like kills me at the end of the day, like fulfillment, document collection, doing like signing packages. I love the strategy calls with clients. I don't do a lot of discovery calls, and we can touch on that later, but I do a ton of strategy calls. I enjoy that part. And then it basically goes off to, my business partner, I call her. She's like an integral part of the business. She'll do all the document collection, kind of like clean up the app. And then I jump back in, and I love underwriting. So I'll underwrite, get a commitment letter, and then she takes it from there. So I focus on two things that, like, at the end of the day, I want to be full of energy because I want to go pick up my kids and like be excited and, be able to play with them, instead of getting bogged down. So in terms of an investment, yeah, I pay my partner like quite well, I think, for an industry standard, but I'm much happier to do that than try and, keep more of the pie and just be burnt out every day.
Right. So you're the things you like to do are the strategy session and then the making and getting a commitment. So got the strategy. I'm going to make sure I'm going to get this thing approved, and then they take it across the finish line for you, any last pieces, and you don't have to spend your time chasing down a T4. You can pick up your kid and not.
Yeah, exactly.
Okay. So walk me through. I also know you started a podcast a while ago, a few years ago, which I'm a big fan of. So I've started a podcast 11 years ago now, so tell me about how has that helped? What have been the tangible and intangible benefits of having a local real estate mortgage focused podcast?
Yeah. So yeah, a bit of a plug, Kelowna Real Estate Podcast.
We'll put a link so you go check it out with you guys. I think what you're doing is brilliant. And keep going.
Yeah, when we started, we had no idea really why we were doing it. We just thought there was a void in the market, and we loved listening to podcasts. And when I say we, it's Matt Glenn. He's my co-host. He's a real estate agent in Kelowna here. So we were just golfing one day and thought, you know what? We would really love to do this. It would be fun. It'd be kind of a good challenge for ourselves, get out of our comfort zone. Why don't we like commit to doing it for a year, and we'll try and get like 50 shows. And knew that it would be like a pretty slow burn, but didn't know what would come from it. But the main thing that's come from it is that authenticity piece. If somebody listens to you for a couple hours, and realistically, they're not even really listening to me, they're listening to my guests. Like, I'll maybe speak for the total of 8 minutes, but they just naturally, trust you. and they
Yeah.
know about you and they know about your life. So it's
But they
much
can
like
tell a lot
social
about the
media.
type of questions you ask and how you interact with someone. Do you guys do
Yeah.
any solo shows? So is it all interview shows or is it a mix?
We've done, I think, maybe like 5 solo shows,
Okay.
which we should probably focus on more, but we just love having guests on. Like there's a lot of interesting people to speak to. But that's, when I said I don't really do discovery calls, that's kind of one of the main reasons is I'll get an intro from a referral partner, or they'll reach out to me because of the podcast or friend of a friend, whatever. I get them, I'm a bit backwards in this. I get them to fill out an application first. So, cause I really want to protect my time. My partner will collect documents and then I'll dive into it and I'll really find opportunities. And usually they're okay with it. Like, it's a bit of a barrier entry to them, but they're okay with it because they've listened to the podcast. So
Right.
having that's pretty great. And then
So
like
it actually
tangible,
reduces the amount of work. The work that you put into the podcast reduces the amount of work you have to do to convince a client that I should trust you enough to give you documents. And because there's a trust factor there, right? It's like, I got to get you this stuff. I got to fill it out. Maybe put in my SIN number. Like that's always been people feel a bit like, oh, I just want to I just want you to tell me what my options are. I don't want to give you all this info. But the fact that you have this podcast builds so much trust that they're willing to do all that before they've even actually got on the phone call with you.
Yeah, which is crazy. And
so what percentage of your clients will give you the full app and stuff before you even talk to them? Would you say everyone? If you think back to the last year? All of them.
Yeah. I never have anyone walk away. If I send the link for an application, everybody does it.
Right. Are you guys listening to this? Anybody listening? Like this is the power of building your authentic brand and your voice with things that you can share and sticking to it for 3 years. Obviously you guys have, this has been because it's easy not to do as well. The other part about it is that I've been doing this 11 years. And so numerous times I'm like, what am I doing? And yet you just somehow get up and do it again. And it just keeps building the momentum, right?
Yeah. I think we were, in the second year, we were just kind of doing it because it was like, we're having fun. And it was hard to quantify the value out of it, but the conversion rate we knew was increasing. Right. You'd be having conversation with clients and they would say, hey, where do you think rates are going right now? Oh, I just did a podcast with Brendan Ogmanson, BCRA chief economist. Why don't you listen to that? Like he spends 45 minutes talking about the bond market and Bank of Canada overnight rate. Like that's an amazing resource. Should I be, parroting that?
Trying to do a better job than them? Probably not.
Totally.
Just let
exactly. Yeah. So I think the conversion's been great. And then in like a monetary value. So to be fully transparent with it, we've done 104 shows now over, like you said, 3 years. My cost to that, like my direct cost, obviously I split it with my co-host, is about a $20,000 investment. And that's just, having our producer basically. Like there's not a lot of equipment that comes with this. So a few subscriptions of software, but our producer's incredible. So she runs with it. And then it gets put out on, like we get 3 social media reels, like on Instagram, goes on YouTube, LinkedIn, everything like that. So, out of the 20,000 I've spent, I can directly correspond just over $4 million in mortgages that I've funded. So, about $40,000 in commission. Plus we pull on a couple sponsors once in a while. So we have another, like, my portion of sponsorships, another $5,000. So I'm net up 25,000 from the podcast.
Right.
Which
and you don't do discovery calls. So like, what is that worth to your business when you think about, and then also the network that you build? The thing about a podcast, especially an interview style show, is you build a network of people that know you and like relationships. And I wonder if you went back and looked at the 104 guests, have any of them become clients?
Yes. Yeah. I can pick one off right away for sure. I just funded that mortgage.
Was that included in the 4 million, or is that is that additional?
You know what? I did not include that. So there's another $1 million on that one. So 5 million.
Right. There you go. That's and then there's also those people that refer you, right? If you go back and look to the people that have been on the show, that the guests, that how many of them have sent you referrals. And so if you factor in that number, the number goes up again. And
I mean, one other thing I'll touch on is like we've had a lot of lawyers on, appraisers, like people in the industry, right? When you're working on a file and something comes up last minute and not that you need a favor, but you're speaking with the lawyer saying, hey, like this came up, we need a stat deck, or like, hey, it's going to be close, instructions are being sent out late, can you help me out? Like, I just feel they're a little more, willing to help out when you've like sat down and talked with them for an hour and shook
Right.
hands and like promoted their
And you also
business.
make them the star. It like if the show's done right, it's not about you as the host. You get
Yeah.
the reflected intelligence. People, they're like, "Oh, Scott, you're so smart." I don't know if I'm that smart. I just ask questions, and then people they make that assumption. If you want to make that assumption, you're listening. I'll appreciate that. But like, you make them the star of the show, right? You get them to talk, and I feel like that also helps in terms of building that relationship with the lawyers.
Wait, is that
and
what you're
whoever
doing
else.
to me right now?
Yeah. I'm stealing your intelligence, your IQ. I talked to Dave LaRock. I'm doing a show with him soon. Every time I
He's
talk to
great.
that guy, I feel like my IQ goes up, but it's down again within the next 24. It's only a 24-hour bump in IQ because I'm like, oh my gosh, I'm so smart. I'm like, what did he say again? And it's gone just as quick.
Yeah, he was awesome. I listened to your last show with him. He was great.
Yeah, he's coming out again. So I think it's going to be fun to have a conversation with Dave. If you guys are listening to this, I want to hear what you say. But I totally agree with you. It's almost like you're like the Ryan Seacrest. And if Ryan Seacrest calls and the lawyer's like, oh, yeah, I'll help you get that sorted out, man. It's Taylor. Like, I know that guy,
Yeah.
That's cool.
I don't know if I love that reference, but I'll take it.
What about, okay, so how has your, how have you evolved your role in your business over the last couple of years? So what you're doing, like how you started out and then what you're doing now. I mean, we kind of touched on it, but is there anything I missed there?
No, I don't think so. I mean, I kind of cut my teeth doing a lot of, I would say, alternative deals, and whether it was like a strictly B lender or if it was just a high net worth, or like Scotia has some cool programs, Manulife does, TD does. Like, you just have to find those niche policies where you can make files fit where the others can't. Pros and cons to that, like they can be a lot more work, and unfortunately, they can be like a little bit more stressful. So I'm still doing a lot of that, but what's great about them? I know they're not going to walk into the bank and get it done by themselves. Like, I've literally had clients, like Scotia clients, come back, be like, hey, I got rejected from Scotia. I'm like, oh, what are your assets like? Oh, I can make this fit all day. So yeah, I still focus on that. I don't do a ton of like insured cookie cutter deals. Like, I'm not going to battle on the rate. I just think
it's not first time buyers you're working with. You're working with people that are investors, business owners, that type of clients.
I do the odd first time home buyer, but there's only so much value you can add there. Like, unless they haven't opened a first home savings account or something. But I really want to be able to look at somebody's T1s and be like, oh, this is what we need to do. Here is like a huge value add for you. And I don't want to implement some crazy strategy that they can't track after 3, 4, 5 years. Like, I want to do it now,
Right.
So yeah.
Yeah, that makes a lot of sense.
That's kind of still.
You had mentioned to me earlier before we turned on the podcast about how you had hired somebody before you really thought you needed them, and maybe talk me through that, because there's a lot of people that list. One of the people say to me, "What's your biggest regret?" One is I didn't get a CRM soon enough. Second is I waited too long to hire. I feel like you may have actually got a little bit ahead of that, which I think probably helped you. You hired probably sooner than a lot of people would have. So talk me through that and what you were thinking.
Yeah, like I said before, I just did not love the document fulfillment side of things. I thought I would be better at it because I'm pretty detailed with my own stuff. But you get frustrated with it, and I'm just not that good at it, to be honest. Like, I just, yeah. So I hired her. We did like an hourly rate to start with, and it kind of forced me to drive enough business to justify, paying her. And then you just start to grow into it and start to realize like, oh, I can do more files now. So, year after year, we start to grow together. And then I wanted to restructure things, not because I wanted to like motivate her financially, but I just really did want to see her succeed financially. Like, I want people around, like, much like you, I'm with Bricks because you and Denise, and there's that authenticity piece of like, I feel if I was in a jam at 4:00 on a Friday and I needed call a friend, I could actually call you and you could help me out.
Yeah.
Not that, everyone should do
I don't
that.
know if you have, but I mean, if it's a deal problem, definitely call Denise. She's going to be you have other issues.
I just mean like,
you know who to call.
I just mean like,
I'm not going to call Scott for that.
Yeah. But I just mean like, you're there to help, right? It's not all about the bottom dollar of like, hey, I want to see your business grow. And that's the same contract I have with her. Like, it's just a Word document contract that we've written and, it's evolved. It's like, whatever I can do to support balance in your life and like financial stability and wealth and growth and everything, that's what I want to do. So we've done it more, there's a base salary and then a commission structure. So obviously the more we do, the more she makes, but it allows me to really focus on, where I shine with clients. And I think that provides a better service to clients. And then it allows her to do what she's really good at. So we both kind of stay in our lanes. And I would say like I would probably be doing 30% less volume without her. Like I just would not be able to keep up, So
and you'd also, the enjoyment would be, it would suck the life out of you having to track down all that stuff and just, so
I've told her multiple times, I'm like, when you quit, I'm quitting. Like
we're going together.
Yeah.
That's funny. I got a question for you. What's the best thing that you've done in the past year that's not mortgage related? So what's something in either a new habit or that you adopted or that has been not mortgage related?
Yeah, good question. Honestly, I'd say 12 months ago, I was in a bit of a slump, like just like drained, two young kids, like you're drinking way too much coffee, just trying to like juggle everything. So I would say in December, I just pretty much like started cutting out booze, eating healthier, drinking more water, like all the basics. I started working with a naturopath just to like do some blood tests and like fine tune things with some like real.
Maybe afterwards I'll ask you who, because we're in the same community. I've got to find one. So
I'd like to do. He's awesome. So, we're doing like blood tests every 3-4 months, just like tweaking things with some like vitamin D supplements, like nothing crazy. But that, it's almost accountability. Like you're now paying for a professional to give you advice. If you don't actually execute on that, like what a waste of time and money for everyone.
Yeah.
But since I did that, I went and got my VO2 done, my DEXA, a really good friend got me like the Whoop band. So I've just like really started to like invest more.
I think we've been on parallel tracks together because I've been doing a lot of this stuff, minus blood testing. But I got the Whoop and the DEXA, and how often are you going to do the DEXA? So if anybody doesn't know, what is a DEXA scan? Somebody's listening, and this is not mortgage related, but you're still a human and you should take care of your health.
It's you lie down in a bed, kind of like an MRI. It scans you. It figures out like bone density, lean mass, visceral fat, kind of gives you like your biological age in terms of like your health. And then, I took advice from you, like you can just drop that in Chat GPT and figure out, how you want to train. But to try and circle back to your original question, I guess I've just really invested in myself in physical health and mental health. I took a week off and did what's called the Hoffman process. We won't get into that. It's like a whole nother podcast, but it's, basically you're disconnected from society for a week and you just dive into, mental capacity and like, generational kind of patterns passed down. Which to be able to take a week off in this industry and not have my phone on and have my business partner fully handle everything, like that just speaks to how integral she is.
And how much trust you have.
Yeah. So I'm just in a better headspace physically, mentally, because I've started to invest in myself again, instead of like, at 6 a.m, I've got 4 files on my desk. Like I won't do the workout this morning. I'll clean these files up. I did that too frequently and you just start digging a hole. So
you start. Yeah. And then, what did you still drinking coffee? So you drink it too much or you just limited it?
Still drinking coffee. So I started to do it like 90 minutes after I wake up. And then I cut it completely for a few weeks. And then, somebody sent me like a Instagram post or something that caffeine's actually good in these kind of areas of life. And I don't know, I'm just always tweaking things, but I try not to have a vice on anything specifically.
Right. Yeah, that's good. I probably drink too much coffee right now for sure. Just as you're saying that, I'm like, I gotta look at. I went on this. I took a week off. I told you before. I took 7 days off with no internet for the first time in 19 years, and it was glorious. And then I came back and I jumped on my Hume scale, and my body fat percent was higher than I liked. And I'm like, damn it, I got to get back to counting macros, which is protein and keeping my. So I'm back. It's good. Like because I was pretty happy with it, a few months ago, but now it slips. Summertime, you have a few more beer, and you just have got guests. And I definitely feel better when I take care. You can't show up for your clients or anybody if you're not taking care of yourself first. or your
And you know what?
family.
You,
Yeah.
like it's law of attraction, right? You start being healthier and like doing a triathlon or something, you're going to meet clients that are also like doing those activities. You know, if you're just sitting on the couch drinking beer, and like, not that there's anything wrong with that, but like those are probably the clients you're just naturally going to like be attracted to. So yeah, you just want to change the circle a little bit.
Yeah, that's good. Anything I didn't ask you about that you think would be helpful for our listeners?
No, I mean, I think the podcast is obviously kind of a tough one to just dip your toe in or just start by yourself. But yeah, the lesson I think I want to take away from that is just that like authentic conversation, you know, and like you pointed out, when to say no, and just really focusing on serving the client, like put yourself in their position. So yeah.
Right. What would you do? And I'd say that to clients, if you were my cousin, here's what I would do. Or you're my, like, based on their age, or my aunt, if they're older than me. And I would psychologically move them from across the table to me to beside me. And I'd think about, okay, what would I say to my family member? And then I go from that frame. And what I found that it helps, they actually feel it, but it also makes me put aside my, okay, what am I going to make from this, this deal or whatever.
Yeah.
And I feel like that's helpful.
And even on that point, like, what are you going to make from this deal? Like, honestly, that's a bit of my strategy call with them too. Like when we're talking rates and terms and products, I'm like, hey, here's the 3, 4, 5 year fix. Here's the variable. And sometimes if they're coming out of like a 5-year fix with whatever their past lender, like, well, why'd you do a 5-year? Like, oh, that's all they presented you. You know, like that bank actually, like we get paid more on a 5-year. You know, like, so I really try and educate clients on like the whole picture of what we do instead of just, hey, this. And sometimes it's too much, right? People don't want to know that. But those are probably not the clients.
You have to gauge the client a little bit, but you're right. Like that's a good point. I mean, I never paid attention to the commission when I worked either. It was just do what would take care of the client, and the money took care of itself, is what I always thought. And but that's good. Okay, and where can people find you online?
venturemortgages.com, on Instagram, Venture Mortgages, and then Kelowna Real Estate Podcast on all the podcast platforms, YouTube.
If there was one episode, okay, if there's one episode that you think our listeners should go listen to, which one should I send them to?
Oh man, that's tough. Okay, so we've done a few with Brendan Ogmanson. Those are all great. We did one with Scott, which was also awesome. I got to say that. There was one in, I think it was January 2025, so pretty recently, with this guy Brady McDonald. Super cool Canadian, moved to the States, abundant style mindset, and just like really focuses on physical health out of everything else. So
we'll put a link to that one in the show notes, because if we're going to send people there, let's send them to one that you think, hey, this is one that gives a representation of what we're about and everything. So great.
Yeah.
If awesome. You can send a link to that one to me, and I'll make sure our team puts it on there.
Yeah, absolutely.
Okay. Thanks, brother. Thanks for chatting with me.
Yeah. Thank you. Appreciate it. Have a good one.
Hey, thanks again for listening. Let me ask you a question. So what would your business look like if you stopped selling and started being trusted by all your clients? I'd imagine for most people, it'd be like, wow, this would be a lot easier. It'd be a lot more fun. I'd probably even have a little less stress. Taylor just gave you a blueprint. And if you want to listen to, I recently just dropped an episode that I had done in the past. I said, what would I do if I moved to your city tomorrow in Canada or the US, and I had to start my mortgage business from scratch? I share with you the 3 things that I would do. I'm going to put a link to that episode. Go back and listen to it, because I recorded that 4 years ago originally. Taylor did it, and he's living proof of just find a plan, execute on it, and then get the benefits of that plan. If you found this useful, I'm going to ask you to do me a favor. Please share it with friends. Send it to other mortgage brokers. Hey, check this out. Share it with a realtor friend and say, hey, look, why don't we do something like this? Because Taylor, one of the benefits, I think one of the tweaks that he did, I did my show solo, which is harder for sure. If you have a partner, a co-host, it makes it easier, makes it cheaper and easier, and you can expand your reach. But send this episode to a realtor partner and say, hey, check this out. And the other one that I'm putting, say, let's talk. Maybe we should do something, because I'm telling you, this is one of the easiest ways for you to build a massive network in your community, as well as build trust with clients. And I think it's an absolute no-brainer. But hey, thanks for listening. As I always say, there's no problem in your mortgage business that someone else hasn't resolved. Your problem is who's got the answer. This podcast is designed to provide some of those answers. Thanks for listening, and I will see you on the next episode.